It's scary as hell, even for us who build the systems. Trump was pro-crypto, but just because you want and like something doesn't mean you know how to do that thing.
We've also been working closely with the SEC on being able to use what we've built.
The SEC at the beginning of the year was suing every exchange in the United States. Now they're not.
Welcome to Market Minds, where every couple of weeks we sit down with someone who's part of the Pyth Network. So it could be one of the 120 publishers, the 650 or so applications, or like the case that we're going to go through today, one of the over 113 blockchains that Pyth's connected to. So I'm incredibly honored to welcome Charles here. You're a legend, sir. Thanks for coming on today.
Thank you so much, Mike, for having me on, and Merry Christmas. I think we're only 2 days from it.
That's right. That's right. Yeah. Now, kind of playing off the theme of Christmas. So, we've had some big announcements in the Cardano world and with Pyth. And so Pyth has been the first key infrastructure that's been announced to Cardano at midnight from this three-body group. I think you're calling the Pentad. Is that right?
Yeah, well, 5-body.
Yeah. Okay. 5-body now. Yeah. It's part of these 12 days of Christmas, which has been great to follow along. And Pyth was selected first. I think it's core foundation for smart contracts in a rich environment. You're going to build this out for a whole ripe DeFi ecosystem, and I think the plan includes having bridges and stablecoins, analytics, and custody. Now, Cardano today is a $16 billion ecosystem. It's got an incredible brand, incredible community, and it's got one of the longest standing kind of research-led rigors in our entire space. So in one sense, even just simply adding the fundamental core DeFi primitive would unlock like a net new base of DeFi users that's not depending upon like a vampire attack somewhere. But I don't think you're stopping there. I mean, the ambitions are much greater. Some of the white whales of our industry, it's getting Bitcoin DeFi going, managing privacy for the first time. So maybe we can start here. I'd love to get into the why now, and sort of the vision that you have for what you're building out.
Well, Cardano has always been the slow and methodical, build it right by measuring twice type of network. And we've been directionally right about a lot of things in the industry. What we've been mostly criticized for is that we're kind of not the first to market, but we like to try to be the best to market. So, we have liquid non-custodial staking, the extended UTXO model, and we have a very different smart contract model which uses formal methods. And so as a result, it meant that the DeFi ecosystem of Cardano has been a little slow out the gate. And we've been kind of building from the basement on up, and we have this amazing foundation. And now we're starting to get to, hey, we need to broaden our DeFi beyond just Cardano as a test bed to the rest of the industry. And there's kind of three different directions that our strategy has with that. One direction is getting all of the commercially critical infrastructure integrated. So things like oracles, stable coins, bridge infrastructure, the analytics, and the custodial side, getting all of those put together. That's a really important aspect. And it was really a timing situation of when was the best time to do that. Because the DevX of Cardano was a little wonky, and there's a lot of things in Cardano's basement that had to be finalized with the extended UTXO model, because it's very different from the EVM model, that we wanted to wait at least one or two generations of the smart contract language before we seriously started doing these integrations, because we didn't want a situation where, we'd upgrade something and it would break all the integrations, and we'd have to go to all these different partners and spend millions of dollars working with them to rewrite everything. We needed a little bit of maturity inside the development model. So we've gone through 3 generations of Plutus. We have alternative languages like Aiken and other things that allow you to write contracts in Rust, and languages like TypeScript. So there's enough diversity and there's enough maturity in the UTXO model that we think, okay, now is the time for commercially critical integrations. Second, we wanted to start developing out our partner chain model, and partner chains are something we've been planning since 2016, and just now we're starting to roll out. So you see the launch of Midnight, which has been a very successful launch. I mean, a token just came out. It's $2 billion FDV, more than Starkware, ZK Sync, Aleo, and Mina combined. For the ZK space, it's unprecedented to have something like that. But what Partner Chains does is it opens up the blockchain to blockchain sales. And so we kind of now have this chat GPT of privacy where people can just call it, they get an answer back, but Cardano can host these types of applications that are not meant for users like an everyday retail user, but actual blockchains to call that, or dApps and other chains to call that. So that partner chains model is another really big outcome, and it's something that we can add a lot of value for. And the other thing was that we wanted to get to a point where we had a good cross chain strategy for where are we going to get MAUs, TVL, and transactions from. So we're really pushing heavily into the UTXO space. It's kind of funny, everybody's chasing EVM. They say EVM's one, but the majority of people and money is actually on the Bitcoin side, and they have
Mm.
yet to enter our industry. Most Bitcoin is yield free. Most Bitcoin is not DeFi enabled. So with Taproot and these other constructs, Bitcoin's now starting to enter into slowly the rest of the non-Bitcoin space to get yield. Well, we're UTXO, they're UTXO. We actually have a very compatible model. And the way we think is very similar to the way Bitcoin thinks. So we can offer a trustless experience, meaning you can use the Bitcoin network to anchor the root of trust for a lot of your DeFi and have non-custodial protocols to lend to stablecoins and create yield in Bitcoin for that. So those three pillars, the partner chain model, the Bitcoin DeFi model, and waiting for the development maturity to reach certain milestones, they really play together, and they mean that we're now in a very strong position for Cardano's DeFi to explode. There's a fundamental price mismatch if you look at Cardano native assets to the market cap of Cardano and the user base of Cardano. And a lot of people say, oh, Cardano is a ghost chain and the MAUs are really low. Well, if that was the case, we wouldn't have had 1.5 million people redeem Night, and we wouldn't have had Night come out and it'd have more trading volume than Solana and XRP combined. There's a demand there and there's a mispricing there, and it's because of the isolation that mispricing exists. But once you have the bridges, the oracles, the stable coins, these other things, you start sharing liquidity amongst the networks, and you have normalization of these things. And the fact that Cardano can launch a native asset that has a higher market cap than 99% of the stuff on Ethereum and trades on tier one exchanges, and 11 days in has more trading volume than 99.9% of all cryptocurrencies, is a truly remarkable thing. And it bodes very well for the future of Cardano.
Yeah, that's really cool, and certainly congrats on the launch of Midnight. That's been incredibly exciting to watch, and I agree with you. I think that there are plenty of people who had been professing the lack of excitement, but clearly there is a whole community of people that are really ready for things to happen, and I think that's one of those dormant things that you're really unlocking. Like you're unlocking the dormant, perhaps. ADA holder who's now maybe going to be more involved. And as you were describing, I think really well, the Bitcoin holder who's now going to get involved. I like this thing. I like to think about the stage that we're at as an industry as becoming clearer as we think about like the lexicon of it. And so right now you can understand where we are because everything has like a qualifier. Like we don't have assets. We've got crypto assets or real world assets. We don't have finance right now. We've got like DeFi. I fundamentally believe that everything is going to be dropped when we reach like whatever it is, this financial singularity, and everyone just refers to this as finance. And
Mm-hmm.
the way Pyth was designed was to bring equity prices on chain, and there's strictly speaking no way to do that by buying that data from Nasdaq or New York Stock Exchange then or even now, and that was about 4 or 5 years ago. But for the last few years, nobody wanted or really could bring equity prices or real world asset prices on chain because of the regulatory landscape in the US are really just stifled innovation. Now we're finally seeing these breakout growths, and whether it's from Coinbase with their equities perps, or Kraken, or BitMEX, or Hyperliquid just with Trade XYZ, Superstate, you name it, what we built Pyth for is finally finding that product market fit.
Mm-hmm.
I think that's incredibly exciting to see what you're building for. We think about how privacy is never really broken out, and it's something that's really important. I want to get sort of the big vision on where the privacy sort of meets. What is kind of the next version of finance that's on chain look like to you, and like kind of if you zoom out a bit for us, what's like the sort of 5-year growth plan on where we can be?
Well, there's a huge trend. You always look at mega trends in the industry, and there's the biggest trend right now is the movement from an imperative to a declarative world. It's you don't go into Starbucks and say, "I want a latte. Let me tell you how to make it." You go into Starbucks and say, "I want a latte," and they figure out how to make it. You tell them what you want, and you have constraints behind it, like no whole milk, soy milk, or whatever your constraints are. They fill that for you and they provide it for you. So when you look at a paradigm of movement towards declarative, there's actually a really nice working group called CAKE, the Chain Abstraction Key Elements Working Group. And there's a lot of standards like ERC, I think 7653, and the Open Intents Framework. And the basic concept there is you have like applications and you have permissions and solvers and settlement. But the long and the short is we want to move in a world where you tell your wallet what you want to do, and then somehow it gets filled. Now, the problem is that you cannot do intents without privacy, because the problem is that it's just like miner extracted value. You create a world where basically the solvers in the network can collude and do all these things and just screw you. If you say, hey, I'm willing to pay between $1 to $5, well, then if I'm filling that, I'm just going to charge you $5. You see, you want a fair market price in these types of things. So there's a parallel revolution that's happening with intents, which is also the parallel revolution of privacy. And we're thinking about it from many different lenses. We're thinking about it from regulatory compliance, like how do you automate, have smart compliance where you automate KYC and AML. We're thinking about it for real world assets, like, for example, real estate or stocks or bonds or equity. We're thinking about it for competitive dynamics. Like if you're a musician, you don't want to tell people what your royalty structure is, because if I give Alice 5%, Bob is going to want 5% or less. I can't charge Bob 7% because he can use Alice's rate to negotiate. And on a blockchain, everything's known forever. So these two movements are going to come together. User intention, which is intrinsically blockchain agnostic, it's a multi-chain world, and you're going to combine that with privacy. So the oracle is actually a very important component in all of this, because you're going to have a situation where you have to aggregate many different understandings, and the oracle feeds by themselves have to be private too, because you don't want a situation that people on the outside can look at what you're looking at, because they can then infer your intention and your behavior and ultimately who you are. They can even just kind of draw boundaries and say, boy, you're really interested in the Ethiopian coffee markets in Addis Ababa, and it's always 9 to 5 Addis Ababa time that you're quoting. Maybe, just maybe, you're an Ethiopian person. So it's anonymous, but you can look at that data. So you also have to be able to poll on a regular basis in a way that has a high degree of privacy. So that's why we built things like Midnight, to kind of extend Cardano, because it was not just, hey, let's do privacy enhancing technologies. Okay, great. It's a Swiss Army knife for trusted execution and multi-party computation and zero knowledge and fully homomorphic encryption. Great. Well, that doesn't really matter. What matters more is, what does the user want to do? How do we remove the friction from the user? Because coffee shops would not be very popular if you had to make your own latte. They're popular because you say you want a latte, you pay the price, you get that. And that's what we want to do when we want to talk about one unified market, not DeFi or TradFi, just Fi. And we want to talk about consumerization of the market. The other thing is, you have to be able to start separating the desire from the risk of the execution of the desire. The user doesn't want to be in a position where they have to understand how gas works and public-private key pairs work and how to manage wallets and all this other stuff. It's scary as hell. Even for us who build the systems, we always do like 14 test transactions whenever we move money, or like, I invented this damn thing and I'm still like scared to spend my own money because it's so. And so can you imagine grandma or anybody else? So when you move to a user intention, you also can specify the safety parameters at the same time, and the system as a whole creates a marketplace for keeping you secure. So actors come in and they kind of help you along that journey, which means you can move to a consumer friendly viewpoint. So the next 5 years, that's really the transition, and everybody's chasing it because they realize whoever wins the war of intention is going to be the kingmaker for where settlement occurs, and that's the layer one. So settlement can occur on Cardano, or settlement can occur on Ethereum, or settlement can occur on Solana. Okay, well, who's going to route all that traffic to these various places? We notice this with Ethereum, where a lot of stuff is starting to happen in the layer two, and it's becoming a parasitic load, and it's pulling transaction volume out. And Vitalik's trying to pull it back in to the layer one. But once the cat's out of the bag, they can take all of that. So whoever controls the intention side is ultimately going to control the flow of transactions and the settlement of transactions, and whoever controls the information flows of it. So the Oracle side is going to be in a very privileged position as well, which is why we love you guys You have phenomenal technology. The Pool Oracle architecture is great. It's just well thought out. It's well thought out for sub-second latencies too, especially when everybody's pushing for sub-second finality. You need sub-second oracles to do these types of things. The first-party publisher model is really good too, and the confidence intervals being first class. These are just great USPs, and it shows the builders of your technology really thought carefully about what would an oracle not just need today, but how would that evolve into the future, the next 5 or 10 years, to be useful for both Wall Street and Main Street.
Yeah, I love that you pointed out some of those elements. We were trying to, in developing this, not just push the boundaries of what was available from an Oracle perspective, because 5 years ago the bar was quite low, but we wanted to push the boundaries on what was possible for just financial markets in general. And it's great that it's kind of come full circle. And let's shift gears and talk a little bit about DC, because I've spent a lot of time in DC. I know you have.
Mhm.
I think you even spent some time in Mar-a-Lago. And we two big things that came out this year. The first was being able to work with the Department of Commerce, and publishing the GDP on chain, and a bunch of other data since then. That was incredibly exciting from my perspective. We've also been working closely with the SEC on being able to use what we've built within Pyth, what was really designed for the future of finance. But actually, there's some problems within existing financial markets. For example, they have this thing called the SIP feed, which has the national best bid, best offer, which is great. And it's a great reference for you to be able to, prove best execution. Only one problem: it turns off at night. And there's a whole lot of trading that happens at night. And the Pyth feed does not turn off at night, because we've got partners like Blue Ocean, who's an ATS that actually does the
Right.
bulk majority of trading overnight. And we've got market makers who are trading. So there's a big problem for them, and we're trying to help them fill that gap. But talk to us a little bit about your DC experiences this year. I think you were there at the inauguration.
Yeah.
What did you go in with? Where'd you end up, and what are your hopes for 26?
Well, I mean, it was a frustrating year. We got some stuff done, like Genius Act. Clarity didn't get done, and there was a lot of things that, in hindsight, were not terribly necessary and were counterproductive, like the launch of Trump Coin and the existence of World Liberty. President has a right to do whatever he wants to do, but the hope I had was that he would do it within the new framework, not this ambiguous structure that we currently have, because it converted the legislative process into a political referendum. And so the Democrats are getting ready in 2026 to run on crypto equals Trump equals bad. And they've already released several reports. We didn't really need to be there, and it was unnecessary. Progress was made at the SEC. The SEC at the beginning of the year was suing every exchange in the United States. Now they're not. And, the SEC was extremely anti-crypto. Now they're not. Paul Atkins is a much better leader than Gary Gensler. And there's been also progress at CFTC. And, I just wanted to get to the rulemaking. The problem with the Clarity Act not passing was that we don't get to actually have the real conversation. Everybody was so focused on the language in the bill. Well, at the end of the day, what the Congress is going to do is just defer. They're going to create generic frameworks and then say rulemaking at the administrative level needs to get done. And that's where you really start, the rubber meets the road. Like, can the blockchain be used as a mechanism of disclosure? How do we regulate DeFi? Where do next generation Oracle systems fit with conventional Oracle systems like the Reuters or the Bloombergs? These are open questions, and they're not going to be defined in statute. They're going to be defined in rulemaking, and they're subject to public comment and change. And that's where really you can interface and I can interface and other people can. And it's just frustrating. We're not at that stage yet. We're going to have to wait another cycle to work our way through. That said, the markets are they have had a lopsided recovery, and really, we've had a situation where Bitcoin has gotten institutional embrace, which is why you've seen a huge amount of institutional value flow into Bitcoin. But unlike retail inflow, when retail makes a lot of money in Bitcoin, they tend to sell it and then reinvest in altcoins. So you have this trickle down effect where Bitcoin goes up, then it stalls, and then altcoins go up. When institutions invest, they can't diversify because their prospectuses are locked to a single asset. So we don't have that value leakage quite yet into the DeFi world and into the altcoin world, which is why Bitcoin DeFi is so interesting, because if you can do it in a non-custodial way, you'll have some value leakage from the institutional money. But that was also frustrating because a lot of us were expecting kind of an altcoin bull market, and unfortunately prices aren't quite where they need to be. So it's a mixed bag. And, the other thing is I was so bullish on standards and we worked really hard with NIST. We got the post quantum stuff done, but we weren't able to get blockchain definitions into NIST lexicon. That was important for procurement, because we didn't want a situation where you ran into like the JEDI program with Microsoft versus Amazon, where Microsoft wins and then Amazon sues and says, well, there were no standards for that, and then tries to take contract away. Well, let's say blockchain A gets a deal with the Department of Commerce or the Department of Defense. You don't want a situation where blockchain B says, well, that was an unfair RFP process and then dismantles that through litigation. You want objective and clear standards and definitions of what is an asset, digital asset, what is a blockchain, what is decentralization, what are functional, non-functional performance requirements and these types of things. Because right now we have this apples to oranges situation in the industry. Like Solana says it's better than Cardano, but under what objective metric are we using? Is it decentralization? Is it operational resilience? Is it throughput? And even in throughput, we're a UTXO system, they're not. So, one transaction can be 100 transactions for us. So if it's raw TPS, does that make sense? So usually the Department of Commerce or NIST will sit down, create some objective criteria, and then you can write RFPs for that. I was really hoping we were going to be able to get that done because I wanted to start bidding on like America's Next Voting System or the
Hmm.
Doge project where they're trying to reduce overall spending. Could we advocate for blockchain for a reduction? But overall, the biggest thing was the internationalization, saying it's okay to be pro blockchain. What Biden did is he went around and tried to tell Europe and everybody else be anti blockchain, anti crypto. And so they hedged the regulations a bit, but now that America is saying it's okay to be pro crypto, you see other jurisdictions going hyper pro crypto, like Abu
Hmm.
Dhabi and Dubai, and Europe is even becoming better. And they're trying to say, hey, we're even better than America, so they're creating more regulatory clarity, more subsidies, and more investment into blockchain. So overall, the long term, I'm quite bullish. I just think certain things could have been significantly better handled, this year. And probably the reason being it wasn't well handled was the lack of familiarity with the underlying technology. Trump was pro crypto, but just because you want and like something doesn't mean you know how to do that thing. And he didn't really have strong advisors around him to give him good advice. And I was very perplexed, for example, with the crypto czar. Person had no brand reputation or connection to our industry other than a podcast and some Solana investments. And he was also blended to be the AI czar. So I was like, oh, these are kind of like two very different, very important things. And I kind of feel like you need like different czars, for these things, and you're going to be very distracted. I was more hopeful that somebody slightly more qualified would have been in that role, who would have understood how to create a better agenda and better prioritization. And that's one of the reasons why the Clarity Act didn't pass. We didn't have that leadership at the czar level to be able to wrangle and help prioritize and help people along the journey, and also make the case why this is a bipartisan thing as opposed to just an extension of Trump and crypto equals Trump equals bad on the
Hmm.
left. So that was problematic, and in hindsight, it should have been done differently.
Yeah, I think I agree with a large swath of what you say. You tweeted today or posted today about bridging to Solana. Let's talk a little bit about that. What excites you about bridging to other chains, and what's your view on a multi-chain world when we're at a little bit more of global adoption?
Well, now that we're moving to this like intent-oriented world where you tell them you want a latte, not how to make the latte, the settlement layer, you're starting to ask very different questions. Outside of just base liquidity, you're also asking about the underlying security of the infrastructure. Because here's the problem with AI and what's creating like a really terrifying prospect. Every smart contract system, Cardano included, there are some latent bugs that if you're really smart, you can exploit and cause a lot of harm and shenanigans. And I don't care who you are, they exist. Now, the quantity of those are completely dependent on the languages you use, the tools and paradigms you use, and the overall accounting model and other things. And the problem is the languages, tools, and accounting models are typically chosen for developer convenience, not security, which is why you have the reentrancy bug and all these things in the Ethereum world. Whereas Cardano, we very rarely have bugs because we've chosen kind of the opposite. We chose for security. Well, when AI comes in, within 2 to 3 years, they're going to be so sophisticated. A script kiddie with very little programming knowledge can put the entire GitHub repo of a cryptocurrency and the entire GitHub repo of a dApp in the AI and ask it a prompt, design an attack to extract all the money. And it's going to give them a really good answer. And unfortunately, that means all those latent bugs that they've just been sitting there on the fence that require a really sophisticated black hat, now they're going to become surfaced. So we're going to have a catastrophic wave of hacks and attacks in the next 2 to 4 years inside the industry. So what's going to happen is there's going to be a mad rush to formal verification, a mad rush to different accounting paradigms and languages that actually proactively protect the user. So what does that mean? To quantify risk, a lot of liquidity on the settlement side is going to move from the traditional networks like Ethereum, and it's going to move into actually networks that are built for that. So when you look at Solana or other things, this is one of their big challenges. And for our part, step one is just wiring everything together and then make it very easy for users and transactions to move around. And so some of our users and transactions will move to their network and do things on their network. Some of their users will move to our network and do things on our network, especially with Bitcoin DeFi, because we're a better bridge for Bitcoin than Solana native. So, we'll just share those two things. And then over time, formal verification and other things will become more prioritized. And then what's going to end up happening is people tune their risk and their insurance and their other things. You're going to see a large wholesale movement of MAUs, transactions, and volume, but it's very subtle because it's not going to be the user deciding. You're not going to have a Solana user wake up and say, you know what, I just really want to go to Cardano. And you're not going to have a Cardano user say, I just really want to go to Ethereum or something like that. Rather, what's going to occur is they're going to say what they want, and then the system will kind of figure out where that settlement's going to occur. And then based upon their risk settings and tolerances and other things, it's going to settle in various places because everything else is getting commoditized. Performance, oh, I have so many TPS and all this other stuff. Like all the algorithms are moving in a very particular direction, and the cost will become de minimis within 3 to 5 years. And they say, oh, I want it to settle within this amount of time. Sub-second finality is going to be achieved within 5 years to 10 years. So these are not differentiating factors, your raw TPS, your transaction costs, your finality time. There's really other things that are going to come down to rollback protection, safety, the ability to insure transactions, regulatory compliance, the level of privacy, the level of provability. The other thing is going to be proofs on the wire. You run into this Oracle business, you send the information to somebody, there's always that question, well, how do I know this is right? And is it trust me, bro, or can I prove something about this information? So if it's completely off chain, it's a little harder. But if it's on chain data, there's going to be a huge premium on folding systems that basically can accumulate and fold up the whole state of chain. So every time you send a transaction, you send with it proof that the transaction is correct. And you only need a small bit of information about the underlying infrastructure. So this is some stuff that Solana has to figure out because they're operating at a huge transaction rate. And that means the growth of their chain is unbounded. There are terabytes and terabytes and terabytes turning into petabytes. Well, nobody can possess that. So who's a full node? No one. So that means when you send a transaction by their very construction, it has to have a proof with it in order to verify that it's correct. So Cardano is actually going to be one of the best folding systems in the entire world within 2 years because of BitNight. So that's another service that we can offer. So we tend not just to think about user to user, but we think about blockchain to blockchain services. And are there things that Cardano can do from bridge infrastructure to zero knowledge infrastructure, or other things for Solana users as they build their applications so they can use them more safely with these types of things. So you'll see a lot of that as Midnight wakes up, and you'll see a lot of that with some of the next generation Cardano stuff that we're pulling together. And it's going to be fun to offer that. But Anatoly's a great guy, and he's a little pithy. I am too. And, it's a good ecosystem. They're looking for the next big thing. Volume is down like 85% because meme coin mania has abated. And they're trying to pivot to traditional real finance and being like the adult chain in the room. And they certainly have a large user base, and they certainly have a lot of throughput capability. So it's a lot more fun to partner with them than the biggest incumbent, Ethereum, because that ecosystem is a bit too big and stodgy, and it's always had this presumed arrogance of we've already won. Solana wants to win, and it's nice to be with some fellow travelers in that perspective.
Charles, thanks so much. I'm incredibly excited about this first partnership. To be the first infrastructure into the Cardano ecosystem is a great milestone for us. Your team has been absolutely incredible to work with. We're really excited about the vision you have. I think the net new element of this is really incredible. Net new Cardano users in DeFi, net new Bitcoin users in DeFi, and net new kind of off-chain users
Yeah.
really starting to take advantage of the things like privacy. I think that's a abundance mentality that we certainly need in the space, and I think the biggest winners always have those.
Yeah. Well, I can't wait to figure out how to get you guys into the Bitcoin orbit, and I can't wait to figure out how to make you guys one of the best in class for UTXO. The big loss for Chainlink was that we told them somebody's going to win the UTXO Oracle fight, and that's 4 times the size of the EVM Oracle fight. If you guys stand away from this, like somebody else is going to take it, and it's nice to see competition, and it's nice to see forward thinking companies, and there's a lot we can definitely offer the Pyth ecosystem, and there's a lot you guys can offer us. It's been a heck of a lot of fun working with your team, and there's just a lot of good people there, a lot of good engineers, a lot of high integrity people, and that's just phenomenal. And if every partnership was like this, my life would be quite nice. So thank you so much for coming and being part of the family. We're holding a Pythathon, a Pyth hackathon in March in Argentina, and we're going to get all the hackers down there to try to build something with your guys' infrastructure. So if anybody wants to go down to Argentina and eat some good steak, you're of course invited to Buenos Aires. But we're going to try to roll out the red carpet for all these critical integration partners and say, hey, it's not just a passive integration. It's integration with utility and adoption, and integration with white glove treatment. So anytime you need anything at all, you're part of the family now, and we want you guys to be as commercially successful as possible.
Thanks so much, Charles. It's great to have you on, and have a great Christmas.
Thank you much.